A very good morning. Welcome to Daybreak Australia. I'm Haidi Stroud-Watts in Sydney. We're counting down to Asia's major market open.
Good evening from Bloomberg's world headquarters in New York. I'm Vonnie Quinn. The top stories this hour. A volatile session on Wall Street with stocks and bonds gyrating as a U.S. inflation pickup tempers bets on a Fed rate cut in March.
Also ahead, Bloomberg learns that a national security review of the U.S. steel takeover by Nippon Steel could last much longer than the companies have signalled.
And I'm Yvonne Mann reporting live from Taipei the day before an election set to give investors their first major geopolitical test of the year.
Let's get a quick check on Wall Street and where the session ended. Just a few points either way for major indices. So the S&P 500 down just 3 points, a fraction of a percent. The Nasdaq 100 up 0.2%. But it was a very volatile day with very small ranges for the most part. This after the inflation pickup. The 10-year yield perhaps showing more of a reaction. In fact, down about 5 basis points now, below 4%, which is key to 396.58. And then we had Iran seizing an oil tanker in the Gulf of Oman, and that sent oil prices higher. But we're still around the $72 a barrel mark for WTI crude. For more now on the U.S. inflation print, let's bring in Bloomberg's global economics correspondent, Enda Curran, who's in Washington, D.C. So, Enda, the Fed will be concerned about some of the underlying measures, such as shelter inflation. How concerned?
It wasn't a great inflation reading. Prices for housing, for energy, for used cars, for airline tickets, all ticked higher in December. In fact, prices for auto insurance in all of 2023 rose by the most since 1976. So the data for December suggested that the kind of US disinflation story seemed to have lost some momentum over December. There's still some stickiness in the system, as economists describe it. And this is where there's a kind of concern now that maybe the expectation that prices for goods and services would come off the boil as every month went by. Well, maybe that's not such a surefire bet. As you say, the core reading that the Fed likes to look at, that seems to be heading in the right direction, or at least not taking off, not signaling any kind of major alarm bells for the Fed. It's only 1 month of data. It doesn't suggest the disinflation story in the US is over, but at the very least, I think it does give pause for the whole idea that US inflation is heading back to the target and heading back there pretty quickly.
And of course, the question is how this feeds into Fed expectations, right? We heard from Loretta Mester a little bit earlier. Take a listen.
I think March is probably too early in my estimation for a rate decline, because I think we need to see some more evidence. I think the December CPI report just shows there's more work to do, and that work is going to take restrictive monetary policy.
And do you think that really does suggest that there is further to go, and that perhaps there's now more of an argument for the camp of staying higher for longer out of caution?
Well, I think at the very least it pushes back against this idea that the Fed were going to cut rates in March. Some big houses out there on Wall Street, including Goldman Sachs, were reckoning a rate cut could come as soon as then. But analysts look at these numbers today saying it'd be hard to justify a rate cut given the figures that we got today. We had some Fed speakers out, like you mentioned, Loretta Mester, one of those, making the point that it's probably too soon to be talking about that. And remember, Ms. Mester is among those who's expecting rate cuts this year. We also had Thomas Barkin out making the point he needs to be convinced that inflation is heading back down towards the 2% target as well. Like I say, it's only one data set for December. It doesn't necessarily mean the US disinflation story is over, but I do think it gives pause to the rate cut debate, and probably at the very least suggests that the Fed won't be moving sooner. It might be more towards that mid-year point, and that seemed to be the take from a lot of economists following this story today.
Bloomberg's global economics correspondent Enda Curran there in Washington. Let's get some more market perspective with Ahmed Rezko, who's the Chief Investment Officer at Insignia. Ahmed, great to have you with us. What do you make of this reading and how it feeds into Fed expectations? Does it kind of underscore the ways that investors and markets have gotten ahead of themselves?
Look, unfortunately, I don't think one print, and especially this print, has not really changed the narrative so much. We're still in a disinflation trend in the United States. But I do think that it's going to at least raise some eyebrows at the Fed and among investors into perhaps thinking that they have been a little bit too exuberant in pricing in too many rate cuts from the Fed. At this point, the market's pricing in roughly 150 basis points of rate cuts from the Fed. That's more than double than what the Fed itself has told you that they want to do or project to do for next year. So I think at the very least, it gives us pause, but I don't think it's enough to change the current trajectory that we're on right now.
We've already entered a period where we've seen valuations extremely high, profit margins potentially coming under pressure. So where do you see opportunities, given a lot of the uncertainties that are at play here?
Well, we think for opportunities for this year, you really have to look at some of the losers from last year, or at least not as big of the winners from last year. Remember, last year, yes, the S&P was up 26%, and a lot of investors kind of get caught up with that number. But the underlying trend was one of a concentration of returns among a few names. In fact, if you strip out the top 7 names, the index didn't have nearly as quiet of a year. So I think for investors, they want to remain in, or at least they want to deploy new capital in some of those more beaten down sectors, some of the sectors and companies that did not participate in the rally last year.
Do you still prefer US over international?
We do, and part of the reason why I know that the U.S. is a lot more expensive across many metrics. It's not just relative valuation, but across many metrics. The reason why we're sticking to our call with overweighting U.S. versus other sectors is because we do think that there is a greater than what the market is currently expecting probability of a recession next year, a mild one. And in those cases, U.S. markets and U.S. assets tend to outperform. So that's really the core reason for that.
What about the bond markets? Where are you seeing opportunities across bonds, across fixed income? What does your sort of portfolio look like going into 2024?
Yeah, so that's our favorite place to be right now. I got to tell you, the Treasury market, especially the long duration Treasury market, is where we want to be, because we think in either instance, whether we enter a recession, a mild recession towards the back end of 2024, or whether we just narrowly escape one through a soft landing, I think the long bond, the longer dated U.S. Treasuries are the place to be. Because in the first instance, let's say there is no recession, you will at least find the carry or receive the carry from that trade. We think fair value in case of no recession for the U.S. 10-year is somewhere between 3.6, 3.8%. And in case of a recession, we do think the 10-year will fall slightly below 3%. So I think in either instance, if you're going to deploy fresh new capital today, our highest conviction trade is in longer dated U.S. Treasuries. In other parts of the fixed income market, we're preferring investment grade over high yield. We've done analysis of asset price movements in and around the last hikes from the Fed and the first rate cuts. And in all instances, we find that investment grade and higher grade corporates tend to outperform high yield. So we would prefer investment grade over high yield, but specifically focused on the rate market. We like longer dated U.S. Treasuries.
How focused are you on geopolitics as a main risk this year?
Yeah, we think it's a major risk. And actually, we think the main geopolitical risk is not where most people are focused on right now, which is in the Middle East, although we do think that that's a source of risk. We think the United States is actually most likely to be the biggest source of geopolitical risk this year. We're really focused on the U.S. elections here in November. And let me tell you why. We're at a point in the United States where the country, as we all know, is evenly divided. It's very well polarized. That is well known. But what is, I think, less understood is that half of the country sees the other half of the country as an existential risk to the country, which means no matter what the outcome, whether Biden wins or whether Trump wins, we're expecting a lot of civil unrest, uncertainty, perhaps even protests and violence, no matter what the outcome is. And of course, depending upon who wins, there will be political ramifications, mostly in the foreign policy space, that we have to closely monitor. But we think the U.S. could potentially be the biggest source of geopolitical risk for 2024.
Yeah, which is interesting because, you know, I'm sure you alongside a lot of other investors would see that as perhaps ironically translating to haven demand for U.S. stocks and the U.S. dollar.
Yes, that's right. I mean, remember, at the end of the day, the dollar really is just the cleanest dirty shirt out there. Remember, the dollar, unlike other currencies and other bond markets, people own it not necessarily because they want to, because they have to. It's the deepest and most liquid bond market in the world. So in moments of crisis, it still retains its safe haven status, although it will do so less on the margin than it has in the past. So we're definitely complementing our safe haven plays with other assets. Like one that we particularly like a lot is gold.
Ahmed Reyes-Go, who's the Chief Investment Officer at Insignia. Let's take a look at how Asian markets are shaping up as we head into the weekend, this final Friday fry. This is the fray, I should say, as we set up the picture here in Sydney. We're seeing a little bit of downside pressure there when it comes to trading going into the cash session in about 50 minutes or so, off by just about 0.5%. We're seeing the Aussie dollar more or less on the front foot at the moment, 66.90s. We were trading shy of that 67 level. We did see the US dollar really kind of easing, reversing some of those gains alongside treasury yields falling after markets in a lot of respects largely kind of downplayed that faster than expected US consumer inflation report for December. We saw the Bloomberg dollar index easing just about 1/10%. We saw a rise of less than 0.5% after the CPI release there as well. Taking a look at what we're expecting when it comes to the start of trading across major Asian markets, and it is a bit of a mixed picture. They already have New Zealand online off by about 0.1%. We could see, Vonnie, just a mirroring of what was really a volatile session on Wall Street overnight, that kind of whipsaw price action, right, as traders will continue to try and decipher what this one inflation print means to these Fed expectations.
Exactly, Heidi. And let's not forget, we get another one in the Friday session, right, with PPI, which also has elements that plays into the whole thing. Coming up, we'll take you live to the Morgan Stanley Global Alpha Investment Conference in Hong Kong. The event brings together investors and top leaders in business and finance. You can catch our conversation with Morgan Stanley's head of APAC Wealth Management in the next hour. But first, voters in Taiwan preparing to pick their next leader in an election that could change the course of US-China relations. We're live in Taipei next. This is Bloomberg.
I hope that after I'm elected president, China will understand that peaceful development is the responsibility of both sides. Taiwan will not change its position of friendship, hope for cooperation, peace, and co-prosperity.
First, we must have sufficient national defense capabilities. Second, we need to tell China that we are willing to have dialogue with you.
They might look friendly to us, but does this mean that we stop preparing for war? This is too dangerous. Too dangerous.
Taiwan's security issue is a problem for the whole world. Peace and stability across the Taiwan Strait are necessary elements for global security and prosperity.
During my tenure, I will not tackle the issues of unification. I will not tackle the unification issue during my tenure. Cross-strait relations should not only rely on one side.
Why do you worry about what will happen 30 years from now? At least I understand that Taiwanese people do not want reunification within 10 years.
The three contenders to be Taiwan's next president there are speaking ahead of Saturday's election. It's a vote that carries serious implications for geopolitics, trade and investment. Joining us now from Taipei is Bloomberg Markets co-anchor Yvonne Mann. And so, Yvonne, plenty of reasons for global interest in this election, obviously.
Yeah, Vonnie, and I think that the amount of global interest we've seen leading up to this election is something that we really haven't seen in many years. And in fact, this is one of the most hotly contested elections we've seen in decades. And you got to ask why and what's really at stake here. And I think it's because of this high level of tension between the U.S. and China now. You have Taiwan's position, of course, in key supply chains like the chip industry that certainly is leading to a lot of implications of what the outcome could be. And what does it mean for the global economy as well? And then you got to wonder, right? This is a chance for the Taiwanese voters to decide what the future of Taiwan is going to be. Is this one that is going to be closer with China, which is exactly what the opposition parties, the KMT and TPP, are vowing for, which you heard just now? Or is it a chance to fight for democracy with, of course, the U.S.'s backing, which then would set the course for the DPP to win a third term in a row, which is something that we haven't seen before here in Taiwan?
Vonnie, are we seeing any signs of Beijing trying to meddle in this election? And how does that potentially play out with the result on Saturday?
Yeah, you guys have been reporting about some of this, right? Some indications that we've seen that, China is trying to interfere in this election, and everything in the form of Chinese balloons, which we've seen have passed by and crossed the median line of the Taiwan Strait almost every single day this month. Also, some even flying around the island as well. And then there's forms of sort of economic coercion, right, with Beijing suspending some of these tariff concessions on some Taiwanese products and warning that more could come. Then you've seen some maybe perhaps dirtier tactics out there. Of course, we can't verify where they came from, but even just fake videos of President Tsai Ing-wen have been surfacing online as well. So, this is something that I think Taiwanese voters are used to. We've seen this in the past. So certainly there is still a level of discussion here of how far Beijing will go in interfering further or even showing their displeasure if the DPP, in fact, wins another term. It's hard to say at this point, right? Because, there is a sense that, of this whole San Francisco sentiment that President Xi Jinping wants to maintain the sort of optimism that carried on in November after meeting with President Biden. And then again, also China going through a lot when it comes domestically in its economy right now. Does it have the capacity to continue and talking and interfering in Taiwan? That's also up for debate. We had President Tsai Ing-wen saying maybe China right now to consume domestically, to even think about some sort of invasion with Taiwan also. So certainly, there are limits to all this. Maybe no drastic actions in terms of the Beijing response, but certainly I think it's safe to say we could still see some pressure applied by Beijing in the next coming days or weeks.
It's interesting, though, Yvonne, isn't it? Because, most elections are at least in some part about pocketbook issues, but this one seems different. Is it just about China, this particular election, or are there other domestic factors at play?
I mean, that certainly is a key narrative in the headlines here. U.S.-China relations, cross-strait relations. That's what the global, I think, investment community is very, very attuned to here right now. If you ask the local mom and pop here in Taiwan what matters to them, yes, China is important, but let's keep in mind this is also an election that we have to talk about the economy as well, domestic issues, right? This is a Taiwanese population that is also among many economies dealing with the cost of living issue. Inflation is high. Wage growth has not picked up. In fact, it's been slower than expected as well. And housing affordability is certainly a key issue here in Taiwan. So I think, especially when it comes to some of the young voters here, I think they make up about a fifth of the population. It's not so much about China in some ways, but also about the economy, which has shown some signs of fragility here as well. I think the government was talking about their growth forecast for last year. It's around less than 1.5%, which is the slowest we've seen since the global financial crisis.
Bloomberg Markets going. Kovan Man there on the ground for us in Taipei ahead of that key vote this weekend. We'll get more expert analysis too in the next few hours as we count down to Saturday's vote. That's in addition to those full results and analysis from Monday. This is Bloomberg.
We've learned a U.S. national security review of Nippon Steel's takeover of U.S. Steel is likely to last until late this year and possibly into 2025. Bloomberg's Sue Keenan joins us now. And Sue, that's a lot longer than the companies have publicly indicated.
Yeah, this defies the indications we initially heard from both Nippon Steel and U.S. Steel, saying that the $14.1 billion deal would likely be completed by the end of the summer. In fact, U.S. Steel CEO reinforced this in his December earnings call. Completion completion by the second or third quarter. Sources close to the matter, however, tell Bloomberg that a national security review unlikely to conclude until late this year at the earliest. Bloomberg's report, as you saw initially, knocked shares of the U.S. steel company down by almost 4% before they pared those losses. Scrutiny by the secretive Committee on Foreign Investment in the U.S., as it's called, is in its early stages, according to sources. The special interagency panel, which is led by the Treasury Department, has the power to approve, block, or amend the deal on national security grounds, or they can send it back to President Joe Biden for a decision from the Oval Office. Again, while the precise timing of the review means unclear, people close to the process said they expected it to take about a year or longer, and that the process can really lurch ahead or be delayed due to legal wrangling, as is typical of a review of this kind, where you have a buyer from Japan or any other foreign country.
So tell us about the concerns that this deal could have as we head into an election year in November, the vote, right?
That's where it gets complicated, because U.S. Steel is located in Pennsylvania, which is not only a battleground state in terms of the election, it's also where Biden was born. It's also a heavy union state. We know the union initially and has vocally opposed this deal. Nippon's plans immediately touched off calls from both Biden supporters and Democratic lawmakers for a close review of the deal. Last month, the Biden White House said the deal deserved, quote, serious scrutiny. And that's a call that earned praise from the United Steelworkers Union. Again, they have been opposing the deal from the moment it was announced. Now, Trump has said Biden's policies have weakened the U.S. economy, so that's become an election issue. And two senior administration officials tell Bloomberg they expect the review to be on the longer side of typical reviews. And these are typically done in secrecy, so there's not much information that will be becoming available. There's been no comment from Nippon or executives at U.S. Steel. Back to you.
Bloomberg's Sue Keenan there, Sue, thank you. Other corporate stories we're tracking this hour. U.S. air transport regulators have opened a formal investigation into Boeing's production operations following last week's mid-air door blowout. The FAA says Boeing needs to comply with the high safety standards that they're legally accountable to meet. Regulators grounded 171 of the 737 MAX 9 jets in operation, prompting airlines to cancel hundreds of flights. Airbus set a sales record in 2023, racking up more than 2,000 net orders in what has been one of the most active purchasing periods in aviation history. The sales were driven largely by the plane maker's mega deals with India's Indigo, Air India and Turkish Airlines. Airbus also beat its annual delivery target by achieving 735 handovers. Reuters is reporting that Tesla will suspend most car production at its factory near Berlin from January 29th to February 11th. The moves stem from a lack of components due to shifts in transport routes because of the armed conflict in the Red Sea. Chinese automaker Geely had also warned last week that its sales were likely to be affected by shipping delays. Tesla down about 0.75% now in the post-market trading. Plenty more to come right here on Daybreak Australia. Do stay with us. This is Bloomberg.
We do have breaking news when it comes to a response to these ongoing attacks in the Red Sea by Yemen's Houthi rebels. We are hearing that the UK Prime Minister Rishi Sunak has authorised joint military strikes with the US against Houthi rebels in Yemen, and his cabinet has approved that action. That's according to a person familiar with the matter speaking. The allies looking to deter further attacks on commercial vessels that have been taking place increasingly in the Red Sea. Sunak's cabinet approving the decision on a conference call on Thursday. Airstrikes are now possible as soon as later in the evening, according to that person familiar with the matter who asked not to be identified discussing these private conversations. Sunak's office has declined to comment for now. We're seeking more details, but the US and the UK had earlier warned the Houthis of unspecified consequences if they keep up that string of attacks against these trading vessels and ships passing through the vital shipping route. We saw earlier on Thursday the Houthis firing a ballistic missile in the Gulf Gulf of Aden in what US officials say was now the 27th attack on commercial shipping by the group since November 19th. We also saw a reaction from the Houthi leader as well, saying they're vowing a big response to any US military attack. The leader of the group threatening, quote, that big response to the US and its allies if they indeed proceed with military action against his group will confront the American aggression, according to Abdul Malik al-Houthi in a speech on television on Thursday. He says any American attack won't go unpunished. We're now hearing, according to a source, that UK Prime Minister Rishi Sunak has authorised joint military strikes with the US against Houthi rebels in Yemen, and his cabinet has approved that decision. We'll get more details, Vonnie, of course, on this breaking story as we get them.
Exactly, needing authorization in order to announce it. Well, turning to another top story, the pickup in US inflation tempering bets on a Fed rate cut in March. Here's what some guests on Bloomberg earlier had to say on the latest data.
CPI coming in hotter than expected.
CEOs are already complaining about inflation. They're saying the cost of doing business is higher.
That has proven to be very sticky because of wage inflation.
From wage increases to higher interest rates.
This economy is rebalancing. The labor market is rebalancing.
It's not a sprint. This is a marathon.
That still puts us on a downward trajectory for inflation.
We think that the Fed probably won't start cutting rates until around June.
They're going to have to be patient. They're going to have to wait.
Push back the timing of the Fed's first interest rate cut.
Likely not 6 rate cuts, with the first one starting in March of 2024.
And the key thing will be the course of inflation.
We see less rate cuts, and we see them starting later because the Fed needs more data around inflation easing.
Well, joining us now is Gregory Gadako, who's chief economist at EY. Gregory, thanks so much for joining. Does this prove that whatever about rate cuts, the last mile on inflation is going to be more difficult?
I don't think so. I don't think the last mile will be the most difficult. I think we will see bumpiness, and we're seeing that in the latest December data. There is going to be some upward movement, even as we remain on this strong disinflationary trajectory. I think there are ongoing forces that will continue to push towards more disinflation as we navigate through 2024. There is an environment where final demand growth is easing. We are seeing an environment in which rent disinflation is likely to pick up. And we're also in an environment where monetary policy remains quite restrictive. We should not forget that. All of those factors should provide to be the ideal combo to really push inflation lower over the course of the next few months.
It's interesting, though, because shelter prices rose up 0.5%. Supercore services, another one the Fed watches closely, up 0.4%. So the same as the previous month, roughly. That's not a great sign, is it, Greg?
It's not a great sign. We're yet to see the full disinflationary momentum when it comes to shelter cost inflation. But that actually is one of the reassuring factors, because one of the key drivers right now of inflation is the fact that shelter cost inflation remains quite high. But if we look at some of the real-time data in terms of rent price inflation, in terms of home prices, we are seeing that disinflation having materialized. It takes a bit of time to feed through into the CPI data. There is a lag because the CPI data is not just new rents, but existing rents as well. So that is actually a reassuring factor. We know that disinflationary momentum will feed through over time and will lead to lower inflation as we navigate through the rest of the year. So we'll be at 2% by the end of this year without too much difficulty. The key question is whether we see some renewed pressures on the supply side, some potential geopolitical risks. Those are all risks that we could see lead to higher inflation. But if that does not materialize, we're on a strong disinflationary trend.
What would it take, Gregory, for those geopolitical risks to have an impact? I mean, we are seeing definitely some disturbances, let's say. Would they have to escalate, in a large fashion in order for them to have an influence, or would skirmishes like what we're seeing be enough?
Well, we are in a supply-constrained world, and I think that's one of the realities that we have to deal with, that business leaders have to deal with in this post-COVID environment. We're still in an economy that is globally rebalancing, both on the supply side as well as on the capital side. And that means that any minor shock to supply can have disproportionately larger effects. Now, what we're seeing in the Middle East and disruptions in terms of trade routes does have a cost, does lead to supply disruptions that will feed through to inflation. But it's going to be regional and depend on how long and how severe these disruptions are. I think what we're seeing right now could have an impact on European inflation, maybe a little bit to a lesser degree on US inflation, but we would need to see much more contagion of the conflict in the Middle East to see a broader and more significant impact on global inflationary trends. And of course, oil price developments would be a key catalyst in terms of guiding the potential shocks in terms of inflation.
Yeah, Reuters reporting earlier that Tesla will halt most Berlin site output in terms of its Teslas because of the Red Sea conflict. Credit card delinquencies, we got that number today as well, and they're now at a decade high according to a Fed study. How concerned are you, Greg, about the US consumer?
Well, I think we have to be careful in how we analyze the US consumer. We're still in an environment where the key driver of consumer spending activity remains income. And one of the interesting facets of the consumer path, the consumer trajectory in the US has been its resilience. We have seen that over the course of the past 12 months, despite a historic tightening cycle, despite these geopolitical tensions, despite credit concerns, we have continued to see consumer spending, the key reason being labor market resilience. We have not seen a retrenchment in employment, and that remains the key pillar of income and in turn spending. So yes, there are some cracks in the foundation of household balance sheets, but we started this COVID crisis with healthy balance sheets on the household side as well as on the corporate side, and that has prevented much more of a retrenchment in terms of spending and in terms of investment. So it is something to monitor, especially for lower income families, but as of this stage, the fact that income remains on a fairly moderate but positive trend is a positive factor.
For sure. We also saw initial jobless claims and continuing claims remaining low today. Greg, thank you so much for your time today. That's Gregory Dacko, Chief Economist at EY. Heidi.
And Vonnie, if you were in Sydney at the moment, you'd be, forgiven for being confused as to whether this is Australia or whether we're in Singapore and Hong Kong. Such is the level of humidity this summer. And, the country was really bracing for a summer of potentially destructive wildfires. Instead, we've seen wild storms, heavy rains that have flooded homes and destroyed crops. Bloomberg's Paul Allen joins us now. And it's also been like, 4 seasons in one day, right? Sunny one moment and then hailing the next in the last few weeks. What's been the impact across industry, across agriculture?
Yeah, this was most unexpected. As you say, we were bracing for what was potentially going to be a very severe fire season. And it's been exactly the opposite, pretty much. The state of Victoria has been having a lot of floods. It's been the wettest start of a year on record since records began in 1900 in Victoria. So a lot of damage to fruit orchards. The wheat harvest is going to be delayed. And if we look further north to Queensland, they've already had one cyclone, not unusual for this time of year, but another is brewing. There's been reports of some sugar farmers losing up to 60% of their crops. Rail infrastructure associated with sugar has also been damaged. So if we take a look at some of the insurers, we've got claims rolling in. The damage bill's likely to be in the billions. And of course, for insurers, floods are a whole lot worse than fires, because fires just tend to burn vegetation. Floods affect a great deal of infrastructure, so the damage bill is going to be pretty bad.
Sounds miserable for very, very many people. Paul, what's causing this? When will Australia get some relief?
Yeah, well, we do, in terms of the cause, we have the return of El Nino after 3 successive La Ninas, and that's a term that many people would be familiar with. Less familiar is a phenomenon known as the Indian Ocean Dipole. That was meant to be strong as well. So those two combined was meant to bring these hot, dry conditions and create a severe fire season. But we've got a third one for you that we can all now stroke our chins and nod wisely about, and that's the Southern Annular Mode, which a lot of people might not have heard about before, but that's really nullified both, and it's bringing a lot of this warm, moist air. And as Heidi mentioned, Sydney's like Singapore at the moment. It's had its most humid day on record yesterday, and today is the same, and it's going to keep going for a while. So it all sort of begs the question, how did the forecasters get it so wrong? And we've had the Agriculture Minister, Murray Watt, defending the Met Office, saying, look, climate change has meant traditional forecasting models are just breaking down. They're not really working anymore. So it's making it very, very hard to forecast and give the sorts of warnings that we've become accustomed to.
Paul Allen here in very humid Sydney. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, Bloomberg subscribers can find that at Daybreak Go on their terminals. It's also on the mobile in the Bloomberg Anywhere app. You can customize those settings as well, so you just get the news on the industries and the assets that matter to you. This is Bloomberg.
UK Prime Minister Rishi Sunak has authorised joint military strikes with the United States against Houthi rebels in Yemen. We learned his cabinet approved the move Thursday. The group have been attacking ships in the Red Sea for almost 2 months now. For more, Bloomberg's Nick Wadhams joins. So this is procedural, right? Nick, he had to get permission in order to announce. What exactly has been announced?
What we know, nothing's actually been announced so far. This is what we're hearing from people familiar with the situation, that Prime Minister Sunak has authorized strikes with the U.S. We've known for some time the U.S. and the U.K. have both threatened what they say will be consequences for the continued barrage by the Houthis against commercial ships in the Red Sea. And after you had the heaviest barrage yet a couple days ago, 21 drones and missiles by the Houthis that were shot down by both U.S. and U.K. ships in the region. Essentially, they were forced to respond, so it appears that is likely in the next hours or days.
Nick, what about retaliation? Because we've already heard from the leader of the Houthis that, what they call American aggression will be responded to forcefully.
Right. I mean, that's the big question. So everything we've heard so far from the Houthis is that they will be undeterred by any potential military action. Obviously, we're trying to determine what form that action would take, how extensive it would be, how wide-ranging across Yemen. But, this has been an issue with the Houthis for some time. Saudi Arabia has been engaged in a war against the Houthis for several years now, and the group has only continued to expand and expand its foothold in Yemen. So deterrence efforts and efforts to really roll them back so far have not succeeded. It's a big question facing policymakers, and it's why we've been waiting for so long for them to take action, because they don't want to do so much that the conflict in the region would expand to an even wider war, but they do want to get the Houthis to stop what they're doing.
Yeah, I mean, Nick, this is really complicated because there are several countries in that coalition that wouldn't want to have any part of this, right? It's right. Potentially France would want to do something on its own or wouldn't want to have Spain. Qatar has said, do not get involved like this. This is going to be very serious for the region. So this is a very serious action that potentially the UK and US might take. Will other countries join, or will it just be a bilateral action?
Well, I think, certainly at this stage you would only see bilateral action. Other countries in that maritime task force that was established late last month, I mean, they were so concerned about the optics of being associated with that task force that some didn't even want their names to be known. They didn't want it to be publicly announced that they had joined the task force. So there's a lot of sensitivity there. I think what you're going to see is, if these strikes do go ahead, would be a very explicit statement on the behalf of the UK and the US that they are doing this separately from the task force, which is really, they say, a defensive measure aimed at protecting ships, and not, very intentionally, not the grouping that would be going after the Houthis.
Bloomberg's US national security editor Nick Wadhams with the latest. Another story when it comes to geopolitics, we're monitoring. Papua New Guinea has declared a state of emergency after violent protests this week in the two biggest cities. Australia's ABC says at least 16 people were killed in looting and arson attacks. The violence began when police and defence officials appeared to walk off the job over what they're saying was an unexpected pay cut. The government says an error was due to a computer glitch, promising to fix the problem. The violence comes amid high unemployment and a rising cost of living in the country. Well, you can watch us live and catch our past interviews on our interactive TV function. That's at TV Go. You can also dive into any of the securities or the Bloomberg functions we talk about, plus become part of the conversation by sending us instant messages during our shows. This is for terminal subscribers only. To check it out, it is at TV Go. This is Bloomberg. You're watching Daybreak Australia, and of course, a real test, in fact, probably the first test when it comes to the appetite for geopolitical risk for markets and investors as we head into what is a key year of elections in 2024. And of course, we're looking ahead to the vote in Taiwan on Saturday. Beijing is a huge part of this when it comes to those cross-strait relations, and we're seeing that sort of expressed when it comes to some of these Taiwanese assets as well. It's interesting that we're seeing traders most bullish on the Taiwan dollar at the moment in 16 years, even as the broader world really continues to fret about the geopolitical implications of the upcoming election. Investors, at least via this proxy, is looking more or less unfussed. Currency options looking like the most bullish on the Taiwan dollar in about 16 years, so suggesting that at least when it comes to markets, the bet is on the status quo being maintained regardless of that election. Well, tech obviously is the other big issue when it comes to Taiwan markets, and Taiwanese computer maker Asus is expecting PCs powered by artificial intelligence to become the biggest driver of demand in the coming years. We spoke exclusively to the co-CEO, S.Y. Su, in the lead-up to this weekend's election. He told us how the company plans to recover, from a difficult couple of years.
The 22 and the 23 is some kind of tragedy because we prepare a lot of material and goods, but after the COVID, because the demand suddenly disappeared, so we spend some more time to clean out our stock.
Too much inventory.
Yes. So the first half of the 23 is not good for us. But after we clean out all the stock and the market back to normal, so actually in the second half of the 23, we are getting back to normal. And actually in this year, Q3, we deliver a relatively very good performance.
What's going to be the drivers for that rebound that you talked about?
Actually, I think, of course, in the 24, the AI PC will become a very hot topic. Because after the OpenAI, they released the ChatGPT, I think everyone wants the AI capability.
Is the AI PCs, are they going to be a big driver for the industry going forward? I think I've seen some of the quotes coming from your company saying it's still going to be, at least in the next couple of years, a very small part of shipments, maybe about 3%. Do you have a kind of a projection of the number of units that will be shipped with AI capabilities?
If you are talking about this year, of course, because just as I mentioned, the AI PC includes several different factors, the hardware, software, and the OS, because the Microsoft, they released the OS in the second half. So I think in this year, the AI PC will ship to the market will be in the Q4. So the total number will be limited. And so I think in this year, the AI PC share may be around low single digit. And maybe in the next year, the share for the AI PC will around maybe high single digit. And they will need maybe 2 or 3 years to become more mature and more popular.
Obviously, the supply chain has been a big issue over the last couple of years that is absolutely exacerbated by the US-China difficulties geopolitically. Are you moving production to Indian suppliers from China, or is it simply adding in India in addition to what you already have in China?
Actually, because ASUS is the brand, so most production line, we are co-work with our EMS partner. So actually a lot of EMS, because the geopolitical issue, some customer, they already ask them to have the different production site. So we will depend on the customer's requirement. For example, some US customer, they are request the manufacturer line have the limitation. We cannot use the factory in China. So we will ask our EMS to support that kind of deal in different factory.
I know we're not going to talk about who you want in the election to win. We're not here to talk about the politics, obviously.
Yes.
But what would you like to see, regardless of the outcome or regardless of which party wins, what would be the business-friendly outcome that you would most likely want to see going forward?
Actually, I think either DPP or KMT win the election. I think the one who win and when they take new position. They always want to have the very good economic and business development in Taiwan. So I think everyone, when they take that position, they will try to provide a very stable and healthy environment to help the enterprise to develop and have the good business and economic status in Taiwan.
ASUS co-CEO S.Y. Su speaking exclusively with Bloomberg's Stephen Engel. And our special live coverage from Taiwan continues in the lead up to Saturday's vote. We'll have full results and analysis on Monday.